Trading can feel like this impossibly complex thing, right? Well, today we're boiling down a whole 90-minute professional course into the 4 foundational pillars you absolutely need to know. Let's get into it. All right, first things first, let's get the most important rule out of the way, straight from our source material. Trading is not a lottery ticket. This is a skill, a real craft that takes years to get good at, not days.
And this number? This is why that patience is so crucial. A staggering 99% of people who try trading actually lose money. So, why is that? It's almost always because they're missing a solid foundation. So what we're going to do here is build that foundation and look at what that 1% does differently.
So, pillar number 1. And look, this isn't some secret indicator or fancy chart pattern. It's all about mindset. The people who actually succeed, they treat this like a serious business, not a weekend hobby. You've got to have a plan for every single trade, you need to track your results like a hawk, and you've got to focus on executing that plan consistently, not just chasing the money. Without that discipline, no strategy in the world is going to save you.
Okay, so once you've got that business-like mindset locked in, we can move on to pillar 2, the mechanics. This is all about how a trade actually works. And here's the thing, it's not just about buying something and hoping the price goes up. Trading is a two-way street.
And this is a huge difference between trading and, say, long-term investing. See, if you're an investor, you're usually just betting on prices going up. But a trader, they can make money in either direction. It doesn't matter if the market is soaring or if it's crashing down.
Which of course brings up the big question that trips up so many beginners, short selling. How in the world can you make money on something going down if you don't even own it? It sounds kind of weird, right? But it's a core part of how trading works. Let's break it down.
The course we're breaking down uses this brilliant iPhone analogy, and it makes it super clear. The key thing to get is that you don't actually own the thing you're selling. You're borrowing it from your broker. You sell it at today's high price, wait for the price to drop, then buy it back at the new, lower price to return it. That difference? That's your profit. Now, of course, there's a catch. What if the price goes up? Well, then you have to buy it back for more than you sold it for, and that's how you lose money. That's the risk.
All right, so we've got mindset, we've got mechanics. Now we're at pillar number 3, analysis. This is where you learn how to actually read the charts, to see the story they're telling. And our source points out a really common and really expensive mistake that new traders make.
A beginner looks at a chart and they just see colors. Green means up, red means down. Simple, right? Wrong. The professional looks so much deeper than that. They're not just looking at colors, they're trying to figure out the imbalance of power. They're asking, who is actually in control here, the buyers or the sellers? So how do you actually see that battle playing out? You look at the wicks, those little thin lines sticking out of the top or bottom of a candle. They're like the footprints left behind after the fight is over. So if you see a long wick sticking out the top, even on a green candle, what does that tell you? It tells you the buyers tried to push the price way up, but the sellers came in and slammed it right back down. That wick tells you who's really in control, no matter what the final color is.
Okay, so once you can read the story in a single candle, you can zoom out and move on to pillar 4, strategy. And here we're going to look at a really simple but super powerful way to understand the bigger picture of the market.
First up is something called support. The easiest way to think about this is like a price floor. It's a price level where, historically, buyers just keep stepping in. They see that price as a bargain, and all that buying pressure creates a floor that the price has a hard time breaking through.
And on the flip side, you've got resistance. If support is a floor, then resistance is a ceiling. It's a price level where sellers tend to show up in force, thinking things are getting too expensive. Their selling pressure acts like a lid or a ceiling that stops the price from going higher. Just knowing where these floors and ceilings are is the foundation of a basic trading strategy.
Okay, so we've got our 4 pillars, right? Mindset, mechanics, analysis, and strategy. But all of that is going to come crashing down if you don't have the keystone that holds the whole structure together, and that is risk management.
And I gotta say, this next part is maybe the most powerful quote from the entire course. Your number 1 job as a trader isn't to make money. It's to survive. It's to protect your capital so you can stay in the game. Mastering the stop loss, it's not just a suggestion, it is the most critical survival skill you can possibly learn. So how do you survive? You follow these 3 golden rules on every single trade, no exceptions. Rule number 1, you always use a stop loss. Think of it as your eject button. It gets you out before a small mistake turns into a total disaster.
Rule 2, never ever risk more than 1 or 2% of your total account on any single trade. This is what keeps one bad idea from blowing up your entire account. And Rule 3, only take trades where your potential reward is at least double your potential risk. This is the math that lets you be wrong a lot of the time and still come out ahead. This is the discipline that separates professionals from gamblers.
And that's it. That's the foundation. You've got the 4 pillars: mindset, mechanics, analysis, and strategy. And it's all held together by that keystone, rock-solid risk management. These are the core ideas that separate the tiny percentage of people who succeed from the 99% who don't. So, you now have the foundation that most people are missing. The question is, what are you going to build with it?